Hi, everyone. Thank you for joining us for our Thursday training. Today's host is Evan Beach with Equity Prime Mortgage. Looking at the participant list, most of you are smart enough and you've worked with Evan in Equity Prime Mortgage, or you met him during onboarding, but this is our preferred lender for many, many reasons. And he has made time for us today to talk about renovations. So he's going to take it over in a little bit. He's going to go over a deck. Unfortunately, a deck, just to give you a heads up, will not be available, but we do have a flyer that I will provide in the university at the end and drop in the training Slack channel. So Evan Beach, you want to kick us off and get started?
Awesome. Thank you, Lauren. Hello, everyone. Everybody hear me okay? Thumbs up. Everybody pumped and excited to learn? So again, thanks, Lauren. I sent everyone an email you should have received that has the renovation products flyer as well. What I'm going to go through with you guys is actually, I'm going to pull out slide decks from a 3-hour CE credit course that I will be teaching. I'm setting this up right now. It's going to be in the beginning of March. So you can certainly, I'll send you guys the invite. You're welcome to come to that. I highly suggest it. You get 3 CE credits for it. So it's a thing of value to be there, but this is also going to be very important information for the market that we're currently in, that we were in, and we're heading into. More importantly, renovation financing is going to most likely be a big part of this, and I'll explain why. But basically kind of trying to dive into this because, you know, again, I'm gonna condense 3 hours into, you know, a half hour for you guys and let you ask a bunch of questions, because you will have questions. Let me share my screen here real quick. Cool. Everybody see this? It says renovation financing on the top. Cool. Has our cool little logo on the right. All set. So everyone should have received this flyer. Everybody got this in their email? So cool. So this is something that you can share with clients. This is meant for the consumer. Again, as always, I don't recommend jumping into talking to clients about this. Refer them over and let me talk to them in depth about it, because, you know, it's just something you want to have a talking point about it for that driveway conversation, or as Cristiano says, the sidewalk down the road conversation, right? So you can certainly share this with the public. But just to dive into it here, renovation financing, basically the reason we list this stuff is everyone has lost deals to all these issues here. Home inspection issues. Raise your hand if you've lost a deal to home inspection. You absolutely either have or you will lose a deal to home inspection issues. Occupancy issues. You know, is somebody is the property not able to be occupied? You know, Dave is on this call. Him and I were dealing with this with a property in Asbury where it's just not a livable property. Is the CO okay for it? So occupancy issues, lack of comps in the area. If you guys have issues with appraisals that come in light due to the fact that this is going to be the highest benchmark sale within that square mile radius, so lack of comps will be an issue. So the appraisal may come back light, but there's ways to solve this with renovation financing. Appraisals that are completed with subject to repairs. If you don't know what subject to repairs are, when an appraisal is done on a property, the appraiser goes out and his or her job is to go and to determine the fair market value of the property, and also to make sure that the home is functioning and safe. So that's an appraiser's basically job. They're not home inspectors. They're not going to go through the house with a fine-tooth comb. But the reason we bring this up, subject to appraisal would be the appraiser goes out and sees that a railing's missing, or there's something of concern. There's a piece of sheetrock that's missing in a room. Something's not finished. The appraiser is then going to go and send the appraisal report back, and he's going to say, yeah, the property's worth $400,000. I agree, but it's subject to these repairs being done. So it's subject to the railing being fixed, something like that. That's what a subject to appraisal would look like. Other issues would be if it's you know, a house that has mandatory water or sewer hookups. If you've been doing this long enough, you'll come up with septic issues as far as may not be up to code, things like that. If obviously the property is dated or inadequate, like all these reasons, and anybody that's been doing this for any period of time is going to have deals that have these issues. It's inevitable. Not every property is going to be turnkey, move-in ready to go. And as we get into a market, especially that's going to be, not going to be, it is limited inventory. Everybody that's on this call understands that we're into a dynamic market that is going to have very limited inventory. So when buyers are going around, they're going to see properties in their price range that they may not like the kitchen, they may not like the bathroom. This is where renovation financing is going to step in. It's going to be a very, very useful tool for you to talk to people about. You know, let's say they're looking in a certain area and a certain price range, and they find a property that they absolutely love the location. They love everything about it. They love the school district. They love the backyard. You name it, checks all the boxes, but the kitchen's pink and it's from 1982. I was born in the late 70s, so I'm an 80s kid, so that holds a big part of my heart. But you know, new buyers don't want to see that stuff. So you can then say, all right, hey, Mr. and Mrs. Jones, you love everything about this house. You absolutely despise the kitchen. You hate it. You don't want to buy this house because of the kitchen, correct? These are all goes back to those questions you should be asking them over and over. To isolate their objection of trying to put an offer in the property. You hate the kitchen. Great. Okay. What if we say, hey, we could take 30 grand, you could build a brand new kitchen and you can finance that into your mortgage. That's worth exploring, right? It checks every other box. Let's look into this. So it's a very useful tool to try to save deals like that for you. And let's see here. So the popularity of renovation financing, I'm not going to dive too deep into this. Like, quite honestly, who cares what the popularity of it is? It's going to be popular moving forward here. But it became popular since the financial crisis. We had a lot of foreclosures and real estate owned properties in 2009, 2010, and it's become even more popular right now with overall lack of inventory, like I just mentioned. HGTV, the reason we have that on there, every single person and almost every client that you're going to start showing houses to, I know my wife loves these programs. The rehab programs where they'll show, hey, and again, just so you guys know, all those financing that they're using on those rehab programs, the Love It or List It's and all those ones, and the Property Brothers, those are almost all of them are done through renovation financing. Just so you know. No, very rare that somebody's looking at, hey, I'm going to buy this house for you know, $150,000, which again, also you need to know that a lot of these are located in Mississippi, not central New Jersey. And what they're doing is they're saying, all right, we're going to buy it for 150. Our renovation budget is 125,000. Not a lot of people have $125,000 lying around in the bank waiting to spend it on renovations. I mean, it's very rare. So the bulk of those people on those shows are using renovation financing. So that's why we bring it up. As far as, you know, increased education, this is, like I said, the reason we're doing this and educating you on it, because you want to be able to talk to your clients about it. Just jumping into what the basics of a renovation financing looks like. Purchase or refinance, obviously for you guys, it's going to be purchasing. Purchasing and renovating a property with a single loan. The money for the renovations is getting built into one overall mortgage. It's not going to be a secondary thing. It's all built into one loan. They can purchase the property as is. You're going to see some properties, and clients are going to want to go see properties that they send you that may have, I just got sent one yesterday. The people started the bathroom, didn't finish it. It's literally just studs and a toilet in the corner. But in this particular structure, people can purchase that with plans to renovate it. The loan amount that we're dealing with is based upon the after improved value once the repairs are done. So the way to look at this is they're getting lent money based upon, okay, we're going to do this to the property. It's then going to make it worth this. We're lending money based upon that finished product. So that's renovation financing in a nutshell, is you're getting lent money based upon what the house is going to be like in the future once the work is done. Very important with these, somebody buys a house for $400,000, they want to do $100,000 worth of work. We are not giving them a check at closing for $100,000. That would be financial suicide. There would be, people would just be driving down the parkway, going to Atlantic City, throwing it on black. We would have clients doing that. So it's not like they get a check in cash, hey, do the renovations, whatever you want. Not how it works. The funds for the renovation get set aside in an escrow account at closing. So I'll use that example again. Somebody buys it for 400 grand. They have a scope of work that's $100,000 worth of repairs. It gets put aside into an escrow account that we, the lender, control. It's our money, and it gets dispersed directly to the contractor that's doing the work as the work's being done. So what it does is it protects us, the lender, making sure that the work is being done correctly and as it's stated in the scope of work, and it protects your client as well. We make sure that the work is going to be done, so the after approved value is going to be there. So it protects the client from having, a contractor that just, gets a third deposit and runs out and doesn't finish the work. So it's in their best interest as well to do it this way, and it's the only way to get these done. Cool thing with this is, for you guys being, buyer's agents for people, all the renovations are completed post-closing. So for your purposes, outside of, dealing with me or somebody that's a professional in renovation financing, for you guys, it's a normal transaction. It closes, you don't need to worry about it. All the front end work is done on our end, and I'll explain to you, kind of how these get rolling. But all of that stuff is done post-closing. So we're able to close on that property with the 1982 kitchen, with the bathroom that's not finished. Normally, if there's unfinished, things that are done in a property, you won't be able to close on that property because the appraisal is going to be subject to, and you're not going to be able to close on that property unless the work's completed before or you have renovation financing in order. Or the other caveat is if they're a cash buyer. If they want to buy the property as is and they don't have a mortgage contingency, God bless them, go for it. So again, very useful tool for the market that we're in, where every property is most likely going to need some kind of work, and buyers need to understand that there's ways to get that done. So it's a creative way to present this to your buyers. And you're fixing it after you own it. Again, very similar thing to renovations completed post-closing, but you're fixing it once you take ownership of the property. So all very cool. The different types of renovation financing, and this is exactly what's on the flyer. Can you guys see this flyer? Cool. So as you'll see, these are the same things that are on there. So these are the different ways to do renovation financing. So again, feel free to use that flyer, but just like normal home purchases, there's an FHA version of renovation financing, and that's the one you've probably heard about, the 203K. That's the FHA version of renovation financing. And there's also conventional, which is Fannie Mae home style. So somebody that's a conventional buyer doesn't have to leap into the FHA world if it doesn't make sense. They can stay conventional buyers and utilize home style financing. There is also now VA renovation financing, which is awesome. If not to launch into a whole financing conversation as far as loan products and whatnot. But for anybody that doesn't know, if anybody's a veteran, VA financing is the best financing that's available. So that's why when we're initially talking to someone, if someone gets referred over to us, we're asking them, I'm asking them 35 questions, and one of them is, are you a veteran? So VA renovation financing is now available, which is incredible. Repair escrow accounts. This is also a very useful tool. Repair escrow accounts very simply would be, it's alleviating the need to go into renovation financing. So let's just say you have an appraisal that comes back subject to, you have a buyer that's buying a property, they get the appraisal done, it's listed subject to, I'll use that railing example I used earlier. The railing's missing from to go to the basement or whatever it is, something minor. We can actually do repair escrow accounts and hold this in escrow instead of leaping into the renovation financing world. So it's a very useful tool, and typically we'll allow this up to like $5,000. So if there's something that has to be repaired on the property, we don't have to hold up the closing. We don't have to push the closing 3 or 4 weeks and wait for the contractor to do it. We can say, all right, hey, Mr. and Mrs. Jones, here's what we're going to do. We're going to hold $2,500, and we have an estimate to fix what needs to be fixed for $2,000. We're going to hold $2,500 because we need to make sure that we have a little contingency in there. We'll close. You get the railing fixed, you get this fixed, and we'll disperse the fund directly to the contractor. And we don't have to get into renovation financing. So it's a very useful tool, and not a lot of lenders do this. But we found over the years it's a super helpful way for you guys to get the deals closed in a timely fashion and not have it, go off into la la land, because the longer that you guys do this, time kills all deals. So the sooner something can happen, the better. Gabby, you have a question?
Yeah, yeah, I do. And this is kind of for like everyone on the call. When it comes to a 203K loan, right? Is their deposit based on ARV or based on offer price?
It would be based on everything as a whole. So their deposit would potentially increase because you're now technically, you're borrowing more money. So we need to make sure that they have that certain stake in the property as well. So yeah, great question.
Thank you.
Luke, go ahead.
Yeah, Evan, what's up, man? So when the house gets appraised, say someone gets a renovation loan for a kitchen, right? And then they knock down the wall, start doing the kitchen, and they find mold and everything, and now they have to remediate the mold. Can they use the funds from the renovation loan to do that, or do they now have to dig in their pockets to fix that before the kitchen gets done?
Great question, and you're, as always, Luke, you're way ahead of me. I'll touch on that too, but basically what that would, the way to solve that is we are going to hold, like I just mentioned, we're going to hold the contingency fund. It will be anywhere between 10 and 20%, depending upon the scope of the work. So for that very reason, because whenever you're doing remodeling, as you know, Luke, you can peel back, like you just mentioned, you can open up a wall, all of a sudden there's mold or there's this or there's termite damage. And now all of a sudden you're remediating that and it's another $2,000 or whatever it looks like, right? So we actually hold contingency funds for that very reason. So if somebody's doing a kitchen and the kitchen is $30,000, we're going to hold at least 10% of that. So we're going to have, $33,000 in the escrow account for that reason, because the lender also want to be protected if something like that comes up, because again, for us, it's the same goal as the buyer or the owner of the property. We want to make sure that the after repaired value is going to be there. And if they rip open the kitchen and find mold and it halts everything, that doesn't help us because the after repaired value is not going to be there with an unfinished kitchen. So that's why we would have contingency reserves for that reason. And if the contingency reserves don't get used, it gets applied back to the principal loan balance of the client. Does that make sense? Cool. Anybody else got any questions as we're moving along here? Not right now. Cool. Awesome. So those are the types of renovation financing, you know, that we can perform. So I'll just touch on these. FHA, and for anybody that doesn't know, FHA, the difference between FHA and conventional, FHA is typically meant for, it's structured a lot towards first-time home buyers. It allows you to put as little as 3.5% down. It allows you to have higher debt to income ratios. It allows you to have lower credit scores, but it tends to have higher mortgage insurance. Mortgage insurance can't be removed typically unless you have a refi done. So there's pros and cons to it. And there's going to be guidelines that will fit FHA that wouldn't fit conventional and vice versa. So the FHA 2 or 3K programs, you have your standard, which would include anything over, and this is important, anything over, this says 35,000, but I always say 30,000 because again, like Luke just asked, we're going to have a contingency fund, which would be if on a $35,000 worth of repairs, we're going to need contingency funds above and beyond that. So realistically, this is $30,000 worth of repairs. So a standard or a full 2 or 3K would be if there's structural repairs needed, if it's going to be anything over $30,000 worth of repairs. What's considered a limited would be, for the most part, cosmetic repairs, you know, redoing a kitchen, something like that could be limited. Total rehab cost must be under 30 grand. Typical maximum bid is 30 grand, like I said, because there's going to be allowable fees and contingencies in there as well. So the advantages of limited versus a standard or a full 2 or 3K would be you don't need a consultant involved with a limited one. They're a little bit easier and quicker to move along because you don't need a consultant involved. So it saves probably 10 days to 2 weeks of not having a consultant go out to the property. So that would be the difference with those. The 2 or 3K is existing homes, has to have a CO in place for at least 12 months. So that's part of the 2 or 3K as well. And it can't be new construction. It has to be either unfinished or rehab, but you can keep basically one wall in place and use this. As far as 2 or 3H, I'm not going to touch on this. This is just for disaster areas, but you can do rehab loans in a lot of New Jersey was considered disaster after Sandy, but hopefully we don't get to that point. Home style, again, at the conventional version of renovation financing. Big differences are you can use it for any occupancy. So somebody buying a second home or buying an investment property can use home style to redo the house. Follows regular LTV guidelines for first-time home buyers. With conventional, they can put down as little as 3%. Also, you can use it on multi-unit properties. Again, limited for secondary and investment, only one unit, but very useful. And same thing, it's got to be existing home and it has to have a CO. So VA renovation, again, this is recent that we've started to do this, can go up to 100 grand worth of repairs. Also, VA allows for some cash out. Again, that would be more so on the refi side. You wouldn't be concerned with that. It follows the same government guidelines, the 2 or 3K guidelines. Repair escrow, I already touched on this. We can go up to about 5 grand. Doesn't need to take that leap into renovation financing. Just a very useful tool if there's something minor on the home that the buyer is fine with completing after closing. It's an awesome tool to have in your bag. HUD consultant, as I mentioned, anytime you have over $30,000 worth of repairs, you need to have a HUD consultant involved. And what the HUD consultant does is goes out, meets with your buyer, meets with the contractor that's going to be doing the work on the property, and does what's called a feasibility study. Feasibility study basically tells you, is this work going to make sense? And I kind of call it, I've coined the phrase, I call it the gold bathtub syndrome, where just because Mr. and Mrs. Jones want to put a gold bathtub, a gold-plated bathtub, clawfoot, real nice, into their bathroom and spend 50 grand to do that, does not mean that the house is now worth more than 50 grand, another 50 grand. Makes sense, right? Just because you decide that you want to spend all this money on something doesn't necessarily mean it's going to increase the value of the property, which is what we are concerned with, being the ones lending the money. So he'll do a feasibility study to say, all right, you want to redo a bathroom, redo the kitchen. Great. Okay. It's going to cost, and then he'll get with the contractor and say, all right, it's going to cost this. Fantastic. Now, do those costs warrant the after repaired value that we're looking for? So that would be a feasibility study in a nutshell, making sure that it's going to make sense, making sure that you're not over improving the property, making sure you're not spending, buying a place for 400, putting 200 grand worth of work into it when the closest comp in that neighborhood is 420. Makes sense, right? You don't want to over improve the value of the property. And again, he'll do work write-ups. The HUD consultant will also draw up inspections. Whenever anything's, a draw would be, we are holding the money, the contractor starts doing the work. He puts in and says, hey, I did the demo, I need 5 grand. That would be a draw onto the escrow fund. So the HUD consultant's doing that as well. They are recommended, even if they're not required, we do recommend them for certain projects. Again, if you're redoing a kitchen, you really need a HUD consultant involved? Probably not, but it's going to be on a case-by-case basis. But if you are doing more than $30,000 worth of repairs, or you're doing anything structural, you will need a HUD consultant. But again, it's going to be a case-by-case basis. Feasibility study we just touched on, as far as determines the minimum repair requirements. Again, does not replace a home inspection. They're just talking about after repairs, values. The consultant write-up as a HUD consultant report, renovation plan, all these things we kind of touched on. It needs to be done and included when we order the appraisal. So very important to touch on this. When we order an appraisal for renovation financing, the appraiser is basically doing 2 appraisals. He's doing the as-is value, and he's going to do the ARV, or after repaired value. So that's why, and the timing of these get tricky with purchases because of the fact that we need to have a full scope of work from the contractor with broken down materials and labor prior to the appraisal being ordered. Why is that? Why is that, Evan? Because when the appraiser is doing the after repaired value appraisal, he needs to know the work that's being done. He needs to see, all right, they're redoing the kitchen. They're going to put these type of cabinets in there. They're going to do this. They're going to do that. It's going to be a brand spanking new kitchen. It's going to be top of the line, everything. That is going to affect the after repaired value. Makes sense, right? So to touch on the timing of these, as you can imagine, if anybody's dealt with contractors in the past, they may not be the easiest people to get on the phone. They may not be able to come out to the property for a week to even start the estimate. And since it's a broken down estimate of we need materials, labor, everything broken out, it can't just be, hey, Mr. and Mrs. Jones are buying 123 Main Street, kitchen, 30 grand, here you go. Not going to work. We need broken down materials and labor. We need, okay, redoing kitchen. We're going to do these cabinets. The cabinets are going to cost this, whatever it may be. The broken down materials, and then labor, install cabinetry, $1,000, whatever it is, right? Needs to be broken down. So what the appraiser then does is say, all right, great. We have a scope of work. We can get the appraisal done. Go ahead, Gab.
Okay, my question was just this type of loan, and I know like we just want everyone to understand that this type of financing only applies to like the structure, the main structure on the property, right? Like if somebody decides, hey, you know what, I want to improve my backyard and put pavers down, that is not something that's applicable for this loan type, correct?
It depends. Great question. And again, we touch on that too. And as you guys can see, there is this is why this is a 3-hour course. You know, I just wanted you guys to have a general understanding of this so you can go out and be able to talk to clients about it and be able to at least get them excited about it to come over to me and have me educate them on it. But yeah, Gab, as far as that goes, there are eligible repairs, and I can touch on that too. But as far as being able to do walkways, things like that, it depends on, there's a little bit of a gray area. You can do potentially some landscaping if it's going to be useful to the property. And what I mean by useful is like, okay, we're going to put a retaining wall in here to make sure that the house doesn't slide away. There's ways to incorporate some landscaping. You can say, hey, I need to plant trees here to help out with the, you know, the overall, you know, dampness of the ground that's going to affect the house. So there are ways to get it done. And there's guidelines and everything else like that that goes into this. And between FHA and the home style, there's some do's and don'ts with both of those. But yeah, I mean, there are possibilities and there are restrictions. It really just depends on what they're looking to do. If they say, hey, I want to go and redo, you know, the landscaping and put in flower beds, probably not going to work for renovation financing. For the most part, it's meant for redoing the bulk of the actual house, the property itself. So, but yeah, great question.
Thank you for answering that. I figured we're probably going to have a client who
Oh,
will
no
ask
doubt.
something like that. So
Absolutely, they 100% will. You'll get all kinds of crazy questions. We have people that are like, can I put a tennis court in with this? You know, all those kind of things. And the answer is usually not likely, but it depends on the overall scope of work of the project. So, question was, the scale should be if it's increasing in value. I'm not sure what you mean by that, Hamid, as far as, what do you mean as far as the scale should be increasing in value?
I'm sorry, about like a Gab's question about like if it's like a backyard or anything that we see if it's necessary or if it's not necessary. I was thinking, should the professional appraisal should see it as like if it's increasing the value or not. Is that correct?
Yeah, ultimately it's going to come down to, is it going to increase the value of the property, which is why I mentioned, you know, the gold bathtub analogy. Just because you're spending money on something doesn't necessarily mean it's going to increase the value of the property. It's gotta make sense. You know, also, I'll use the analogy, if somebody spends $100,000 on a kitchen, you didn't increase the square footage of the home. You didn't increase the square footage of the kitchen. You just made it a crazy baller kitchen, which is awesome, but it doesn't mean that the house is going to be worth another 100 grand. It means that it probably went up the cost of the kitchen, you know, the normal cost of the kitchen, you know, 20 grand, 30 grand, something like that. But yeah, ultimately the purpose of this is to increase the value of the home, which is why we're lending on it to begin with. So, somebody's got their hand up, just says iPhone. I don't know who that is. Whoever you are, you can chime in.
You can hear me?
I can hear you, yeah.
All right, my bad. It's Eddie.
What's up, man?
What's up? All right, quick question, because I've been going in and out from calls.
Sure.
So I didn't hear if you, I don't know if you went over it yet, but my thing was, so if you get a house for 300, they do 100,000 worth of renovations, and the appraisal says, yes, now the house's value increased to 400,000. When you close on that home, are you closing as the realtor? Are we closing and doing like commissions off of 400, or would it still be off of 300?
No, you're going off whatever you sell the property for.
So it'll be 300. Okay. And second question. So when they get the property, like you said, I think you might have just told me just now with just saying 300, but so they'll close on the property first, then the renovations will come after.
Correct.
Okay, cool. So it doesn't hold up the process.
No, I mean, the only way that, I mean, these do take longer to close. So if you have somebody that really wants to do renovation financing, especially if it's going to be something that is over $30,000 worth of repair, and it's going to be a full renovation financing, a full 203K or a full home style, they do take longer to close because
Okay.
now we basically have another 2 more people and 2 more layers that we have to get through with the transaction. We have a consultant and we have a contractor. And sometimes there's even more. Maybe sometimes there's an architect involved. It really
Okay.
depends on what the scope of work is. So, you know, you're not closing these in 30 days. I mean, typically we
Okay.
recommend full renovation financing. We got to push for 60-day closes.
Okay. And so now, third question, are you would have a contractor, or they would have to go out and find general contractors? You would talk to them, interview them, or just, you know, go over their credentials and see what's what?
They can go out and get any contractor they like.
Okay.
They have to be licensed and insured. And if we
Okay.
haven't done work with them yet, we do have to vet them. We need to make
Okay.
sure that they don't have, you know, business liens and things like that. And, you know, that
Gotcha.
they have a track record.
Gotcha.
But yeah, they can choose whoever they want. Very important point. They cannot do the work themselves.
Gotcha. And
So
is there a certain percentage that they can go up to? Based, like if they're qualified for 400, how much of that can they use? Like if like a same thing, same scenario. If it's 300,000, how much of the extra, if they want to get it to 400, how much money, like what percentage do they actually get to use towards the home? The full 100, or is it like 90% or 80 or?
yeah, so we would basically figure out what the scope of work is. So they can come in and say, all right, we want to do X, Y, and Z to this property. We want to do a bathroom, we want to do a kitchen, whatever it is, and come up with a dollar amount. And if
Okay.
that dollar amount is 30 grand or less, we can do it as a limited or a streamline. If it's 30 grand or more, it pushes it into the more major project, and we would need to get a consultant involved. But
Okay.
yeah, I mean, ultimately the buyer is going to determine that, and then they're going to say, here's what we want to do, and they can come to us with those numbers.
Got you.
Now, to mention something too, it's very important that these people are pre-approved properly as well. So when I'm talking to somebody about this and they're interested in it, we want to make sure that we're doing our normal thing. And anybody that has dealt with clients with me, we're very thorough up front. We do fully underwritten pre-approvals. And
Got you.
actually it's a necessity with a program like this, because we want to make sure that, all right, they're looking at properties that are 300. We have them qualified for maybe a 350 purchase price. All of a sudden they want to do $100,000 worth of repairs. It ain't going to work, you know?
Okay.
So
Got you.
we want to make sure that they understand what that looks like, and also that I can run numbers for them, because just because they qualify for it, they may not want to have their payment, you know, go up $1,000
Got you.
by borrowing another 80, 100 grand, whatever it looks like. So
Okay.
very important to have these structured properly up front too.
All right, very last question. Sorry for holding up.
No,
And
no worries.
did you say that they can do an addition on their home too?
Yes, you absolutely can. Yes.
Okay, perfect. Okay. All right. That was all my question.
Yep. So I have the largest one that I think our company's ever done in Belmar. If you guys ever want to drive by, it's on 13th, and they basically did $700,000 worth of repairs.
Wow.
So it was a huge undertaking in every fashion, as you can imagine. But it was feasible in that area because anybody that knows anything about, you know, coastal New Jersey, properties ain't cheap, and that property value is there, and it supported the after repair value that he was trying to do. You know, it made the property worth. He bought the property for 700 grand, did $700,000 worth of repairs. The after repaired value was, you know, 1.4 something, so it made sense.
Perfect. Okay. Okay. Thank you so much.
Yep. So another underlying thing there, go out and get those, you know, $1 million buyers, right?
For sure.
Cool. Anything else? Cool. All right. If anybody else has any questions, just interject, please. But as far as like what Gab asked, you know, eligible repairs, they're all guidelines as far as what we have here. And really it's going to come down to, like I said, there's not hard and fast rules for these. We can potentially get something done that isn't eligible initially if it connects to something else. You know, if you're gonna be doing a retaining wall, and in the retaining wall, you have to put a new walkway, we can probably make that happen because it's pertinent to getting the after repaired value and completing the project. So again, we can deviate from some of the guidelines if it makes sense. So again, we touched on this already. A full 2 or 3K is going to be any kind of structural alterations, additions, you know, things like that. The improvements, permanent part of the real estate, attached garages. You can do detached garages if there is no existing garage on site. So a very important point there. If somebody says, oh, I really wanted a garage, and it's a larger lot and they can potentially put a detached garage, they can do that. So something to think about as well. Again, touched on this, full kitchen, bath remodels, appliances can be included in this, flooring, everything, you know, interior, exterior painting. They can repair existing swimming pools. Anybody that's been doing this long enough understands that swimming pools can be a pain in the ass, especially this time of year when it's hard to get pools inspected. So somebody can go into this and say, all right, well, the pool's not in great shape, whatever. And guess what? We can take 10 grand, 20 grand, buff that pool out, make it super nice. It'll look like, you know, Rome back there when they're done with it. So something to know as well. Major landscaping, decks can be done, fencing, septic and cesspool. I have one of those that we're working on right now. So if it didn't fly or it didn't pass inspection with bad septic or something along those lines, that can all be included in this too. Conversion of multifamily properties, also a big one. How many people have shown properties that had a non-conforming, you know, somebody put a kitchen in the basement and it's non-conforming? We can convert that back to the way to make it work and close on the property without it being done. We can have it done at post-closing. So very useful tool. If you do, again, been doing this long enough, I've seen it all, where people just throw things in certain rooms and start charging rent to someone else. Townships don't like when you do that. So we may have to convert it back. So something to consider. Ineligible repairs, we touched on this already. Can't do new tennis courts, gazebos, boathouses, luxury items, quote unquote. Can't do new swimming pools. Existing ones you can fix, you cannot put in a new swimming pool. Fire pits, again, that's one that could potentially work if you're redoing walkways, things like that. You may be able to sell that. Detached accessory buildings, pool houses, things like that. If a garage has already been converted, we may not be able to work on that. Foundation requirements, you have to, as I mentioned before, you have to retain a portion of the existing foundation, or must retain portion of existing structure. So you may see a house that, if anybody's ever seen this, there's one down the block from me right now. They knocked down the entire house, full knockdown, left one wall. The reason for that, you can now do renovation financing. It's not considered new construction. So if you ever see that, that's why people are using renovation financing. You can raise homes. These are useful for my office is located down in Long Beach Island area. A lot of homes that have to be raised, and in coastal New Jersey here too, if a house hasn't been raised and they're grandfathered in, but when they go to sell the house, it's required that the house has to be raised for the flood table and whatnot. You can use renovation financing to do that. Very important to know. You can add on to an existing foundation. You can do additions. We've already been through this. Yeah, again, another thing to touch on, you can do improvements for handicap accessibility. If you have clients that are special needs or handicapped, you can do ramps, you can do things like that. So a cool tool to know as well. And again, these are all limited ones, so we've been through this.
Hey, Evan, can I say one thing? I'm so sorry.
Sure, of course.
One of the first transactions I ever closed on was a renovation loan.
Okay.
And so and I'm very curious about how the process works. So I asked a lot of questions back then. And I know that some of you guys might come across this also. So I know Tom's River just passed a new CO ordinance, right? Where they're looking at certain things. Have you heard about this, Evan? Where they're being very, very specific about property lines, fencing, all of that stuff. And the first transaction I did that was 203K, there was a municipal CO. So it's I don't know, it was a 10-page CO or something like that. And it came up towards the end of the deal. So now we had the HUD advisor come out, right? We had the appraiser come out. We did all the steps. Then it came to CO and it was wait, your sidewalk in the front of your house, there's a tree root or something that's blocking it. So we couldn't get approved for the CO, and our lender was able to roll that cost into the loan. Is that true? If you come up with a municipal issue where they're giving you a hard time about an encroachment, or I don't know, your fence is too close to the sidewalk, right?
Yeah, absolutely.
You're able to roll those costs in as well, right? Kind of those last minute things.
Yeah, exactly. And that would go back to the question that Luke asked as far as, what do you do if you open up a wall and there's mold? Same thing with that. If you get to a point and, hey, there's a root going through your sidewalk, we're not going to give the CO. Yeah, we can have a revision done to say, all right, we're going to have a mason go out, dig up that portion of the sidewalk, remove the root, whatever it is. It's going to be, $2,000 to do that. Obviously it's in everyone's best interest to get these finalized. Again, at that point, but it's weird though, because this was all before you were closing.
Yeah, that happened because it was involved in a bankruptcy or something like that. So it was a very long drawn out thing.
Gotcha.
The agent had no idea that they were going to inspect stuff like that. So it was closer to the end of it.
Okay. Yeah. So at that point, it's even easier because then you can just simply make revisions to the scope of work and say, all right, we need another, whatever that number is, a couple more grand to fix this. It gets added into the scope of work, and then it would have to get sent back to the appraiser to make sure that, that's going to help obviously the overall value. But yeah, I mean, that's a definite possibility, and that's right up the alley of why these things are so useful. Because it allows you to close transactions that a lot of people would just be stuck on. And that's a great example, Gab.
And it sounds like such a big program and a lot of moving parts. And there are a lot of moving parts here, but for the most part, it was a very smooth transaction, right? We used the person that the bank had approved of, the contractor, right? Because they were fully vetted, licensed, insured. And as long as the lender guys that you're working with and someone like Evan is so crucial because he knows what happens next, right? So although you might not be doing this loan right now and you might be super nervous to do one because it sounds like a lot of moving parts, Evan will walk you through each segment of it so that you're prepared for what happens next. So highly suggest using these loans. They're awesome. I mean, your clients end up super happy because who has $100,000 just sitting in their bank that they want to use for renovations, right? So I encourage you guys to definitely walk down this path if it's applicable.
100%. Great point. And I appreciate that. And another good point too is that, these are, from your standpoint, it doesn't really affect anything you guys are going to be doing. Once they figure out, all right, we love this property, we hate the kitchen, let's go down that road, they can talk to me. I can hold their hand from that point on. For your purposes, nothing else changes. You're just simply presenting an offer saying, hey, we want to buy the property for this. They would like to do some renovation financing, so we want to have a 60-day close and try to work it out like that. That's the only thing that's really going to change from your perspective as buyer's agents, is the fact that you're going to want to build a little bit more time into these closing the closing calendar, you can't call me and say, Evan, they accepted our offer, but we have to close in 30 days. Oh, by the way, too, they want to put an addition on the property. No humanly way to make that happen. We need to have, contractors, consultants, all that, which take time. If somebody wants to do a kitchen and it's going to be $25,000 worth of repairs, that we have a shot at closing 45 days. But it all depends on the scope of work, because it's not just us in the transaction. Now we have a contractor, a consultant, and you name it, potential architects. You have then permitting that has to be done. All those things take time. So all very important things. But yeah, don't be scared of these, because you guys don't really need to do much with them outside of talk to your clients about them and let them know that it's a thing of value for them. You're educating them, presenting value to them. Like, hey, did you guys know you could do this? And all of a sudden, oh man, I love this property. You're right. Oh, we wouldn't mind doing that. That sounds great. Cool. Set up an appointment with Evan. He can walk you through it. So again, this is going to be a very useful tool with limited inventory, and that's the market we're in right now, depending upon where you're at exactly. I know here in Monmouth County, we're almost flashing back to like 2021 again, and it happened way faster than anybody anticipated. So you're going to see bidding wars, you're going to see all that kind of stuff. So clients that are looking at certain price ranges may need to understand that it's not going to be a particular, turnkey move-in ready, but that's not necessarily a bad thing. I would argue it's kind of a cool thing to make the house your own. Have an awesome kitchen and be able to finance it. That's incredible. It's an incredible tool. So, and again, these are some of the projects we've done, before and after. This is a kitchen, obviously it's a kitchen. And these are before and after photos, and you can see like it's a different house, a completely different house once these things are done. It completely changes the complexity of everything that they can do. So, you guys can take this and run with it. You can get involved, and I've seen, especially listing agents or buyer's agents that get really savvy with these. They may have, this particular house, and I know one of these that was done where the agent went in and had a designer just whip up some CAD drawings and say, hey, here's what's possible. Check this out. Here's what you can do. It makes all the difference in the world, right? So it's a good example too. You're going to see a ton. Anybody that's been showing people houses, how many times have you seen these kitchens? Over and over and over. Oh, guess what? Hey, how about we finance 25 grand worth of repairs? Boom. It's awesome. Such a great tool. So yeah, at that, I know we only got a couple minutes left here, so I'll leave it up to some questions. I tried to cram as much into 50 minutes as I could here, but again, I'll send you all the invite for the actual CE course I'm going to do. It's going to be at Motion City Media, which you're all familiar with, and it's going to be either there's a 2-hour or 3-hour, so it'll either be 2 or 3 CE credits. I'm a CE licensed by the state of New Jersey CE provider, so I can teach this class. You will get 2 or 3 CE credits for it, and we're going to piggyback it to a happy hour right after that. So it'll be a cool afternoon for sure. So, but I'll leave it open to questioning. Anybody have any questions, concerns, comments, praise?
This is awesome. Thank you so much, Evan.
Of
Does
course.
anybody here have any, there's no such thing as a stupid question, because the more you know, the better you can service your clients. So if there's anything you can think of, now's the time to ask while we have them for 4 more minutes. No, everyone's good. Cool.
Yeah, and like I said, use that flyer that I sent out. If you guys have any other specific questions, I'm happy to jump on a call with you personally and kind of walk you through this. I just wanted to get you the bullet points of what this looks like and kind of the ins and outs of it, so you can have talking points with potential clients, because it is going to be a very useful tool and a big part of the market going into what should be a nutty spring market where there's going to be a lot of buyers and there's going to be not a lot of homes. So this is an awesome tool for you guys to have.
Hey, I got a question for you. When they do this kind of, the interest rate, does that vary because you're adding more money for a renovation loan or a construction loan?
So interest rates on them, I mean, they tend to be slightly higher. You know, they're about, I don't know, an eighth to a quarter of a point higher because it's a riskier loan to do. But all of these, and I'll talk with the clients about this too, but we always do a two-step process with these, because the renovation financing isn't meant to be long-term financing. Because what's going to happen is once they do the repairs, they're going to have immediate equity in the property. So it always makes sense to structure this knowing that
Yeah,
once the work's
refinance.
being done, we're going to do a refinance for them and potentially get them out of paying mortgage insurance, hopefully lower their interest rate, you know, those kind of things. We always have a two-step plan in mind for these. So that's something I would educate the client on too. Like, hey, this is not meant to be, you're not going to be in this mortgage for 30 years.
Right. Okay, cool.
Not that anybody's in a mortgage for 30 years, but yeah, so that's a great question, because that is part of it too. But the good thing is, like, these are the best part about this is it's very limited out-of-pocket expense to do potentially massive amounts of repairs. You know, that one I was talking about in Belmar was $700,000 worth of repairs. I think they paid the consultant $1,500 and maybe had a permit here or there. I mean, it's just ridiculous, the possibilities of what you can do with these. But I will mention, make sure that ideally, I'd love to help you guys out with these, but if a client says they're doing renovation financing and they say they have a lender that's doing it, beware. Make sure you ask your client, do they have a renovation department? You don't want the guy sitting at TD Bank who basically is pushing papers to try to do a renovation financing mortgage. It's going to be a disaster. Make sure that we have a specific renovation department that handles all the payments, the draws to the contractors, the structuring to the contractors, the scope of work, all of that stuff. I will initially set it up, and I have a whole team behind me that is literally a renovation department that handles that. And we're very good at them. We've really fine-tuned our system over the last, decade since we've been doing these. And now they've become more and more popular whenever we hit markets like this. So very important.
Thank you so much, Evan, for this. Guys, just so you know, the sheet that he emailed over to everybody is going to be in the university under the EPM section in Kajabi. So this flyer right here, if you want to get your eyes on it, kind of know what's out there for your clients, it might be a good idea. So this video, along with that flyer, will be on the university by the end of the day. So thank you so much, guys, for hopping in. I hope this was super informational. I learned some new stuff today, and I'm sure you guys did too. Thanks so much. See you guys later.
Thanks, guys.
Bye.